Hello, it's UPB from OptionMillionaires.com. Thanks so much for tuning into my market update for this coming week. We'll figure out exactly what the market's going to do. We know exactly what's happening. We've got our finger on the pulse of the market. Recently, the pulse has been very slow. Not a lot of excitement out of the bulls. The bears have been ruling the market. I'm a bear at heart, but I've been scolded so much by Ben Bernanke and the Fed that I play it light on the put side, and understandably so. So let's get right into it. Meow. What do I mean by meow? Caterpillar. Caterpillar is moving down towards some really strong support at about $86 a share. At that point, we could be looking to get back into the calls, and we'll see if it gets a bounce, and then it starts to pull back. We could be looking at the early formations of a head and shoulders, which could make a more dramatic move, possibly this summer, to about $65, $66 a share. But for now, let's see what happens. I do think a bounce is imminent, and you can look up at the chart. We hit the nice top that I mapped out. It's in the 116s. I believe I posted it somewhere when it was occurring. And then we've had the same kind of action. We've had a high, a lower high, another lower high, and then we just kind of melted lower now without much of a bounce, which is increasing the odds of a bounce. And pull up the RSI, some of the studies there. I mean, just unbelievably oversold. You go back now. I'm in a 2-year chart. We have not been this oversold in the last 2 years, and that was when the stock was in the 50s. So, point being, we could see a very strong move higher from Caterpillar this week if we do hit bottom, and that bottom may come at $86 a share. We can look and see what the options are priced at for Caterpillar. Zicat. The Zicat's meow. No, Caterpillar is a great stock to trade. It's the Dow component. The volatility is low, so you get more bang for the buck. You can play John Deere, ticker DE as well. They're like the little brother of Caterpillar, priced lower, but much like I was talking about AXP and COF, they're like siblings, kind of. DE should be priced a little higher than it is, and Caterpillar may be a little lower. But assuming the market gets a ramp and we get support at 86, we can go out now to the calls for next week. The 90s are going for $1.22. We could probably wait. If the VIX drops, we get a little ramp, we might actually see a cheaper price for those calls. But I think there's a good chance of a bounce, and even the 92.50s, those would offer more risk but more reward. Those probably drop down to about 40 at the open on Monday, assuming the stock's flat and the VIX is dropping. So something to look at. Caterpillar, one of my favorite trades out there. Dow component, low volatility. Let's go to the SPY. SPY was whacked all week. I said 135.20. It broke through that on Monday. It didn't look back. Let's zoom in a little bit. I can show you what I was looking at. I had plenty of support there. 135.20. Bring the line across. There's more lines to support. It broke through it. Let's get into a closer chart here to 5-day. You'll have a clearer picture of what happened. Stock opened lower on Monday. Go to SPY to market, etc. Came back, almost hit that 135.20. That was now resistance. Once it didn't break through that, the market just flopped. It was like, oh. Now it looked a lot worse than it actually was. There were some pushes higher that were to shake the call holders out, the bulls out. So it wasn't as easy money as it looked. But had you bought puts, let's go back in time. We can actually go back in time. Yes, it's like the time machine. We're like Back to the Future here. We go back on the SPY, and we can actually look back and see what Z calls. You know what? Let's not even bother. History is history. Let's go to the charts. That's my watch list. SPY closed pretty much at the low of the days. That's what the market did. But in the meanwhile, the U.S. dollar actually closed pretty much close to its lows of the day. That's a little disconcerting because we've seen both of them move in opposite directions, but rarely do we see them both move in the same direction. Usually something's got to give. And we saw it this week where the stock market and the dollar was up at the same time. And guess what? Stocks fell, dollar remained higher. And that's what we've seen always. The dollar, the US dollar, has been a good indicator of where stocks are going. So if you look at the US dollar index, this is the double bullish fund. Looked like we had a head and shoulders there, but this one's from an alien planet. Looks like it has two right shoulders. We might be topping out as some solid resistance up there at 2260. Then break through it, and that would be a line to look for on the UUP. Yes, not UP, the UUP. So yeah, look for that second right shoulder, and then a pullback down lower to the support. That would be the neckline. So scrumptious. And if it goes down there, we would see stocks rise because that's usually what happens these days, except for today, when in unison everything fell, which is not a good thing. If they're going to manipulate these markets, at least have stocks go up when the dollar goes down, right? Come on, get the story straight here. Let's move on to Facebook. The Facebook. There's no yearly chart for Facebook. It's only been trading a day, so let me move that up. There we go. We fell down to $38. Oh my gosh. After the IPO started trading. It was supposed to start at 11, then 11:05, 11:15. Finally, 11:30 it started to trade. Fell back down to the IPO price. People are like, oh, disappointing. That's what they priced it at. That's good news. You don't want the thing going up 300%. People will be saying it's an irrational market. And eventually, at the end of the day, the underwriters were propping up the stock. Sounds like a penny stock if you think about it. They were trying to hold the stock at $38. And if you brought up the level 2, they might as well have put an infinity symbol in the bid because there was no way that was going to fall. And it didn't. And it'll be interesting to watch and see what happens this coming week. Stock options aren't going to trade on this stock, Facebook, for about a week and a half. So don't get your hopes up just yet. And there's probably no shares available to short either. So you're just going to have to watch it fall or buy it and go long because you like the stock. Go ahead, you can admit it. Visa. I went over Visa last night, broke some serious support, very serious support today, but still worked out a great trade. Had you bought the dip, sold the rip. Once you're selling the rip, the dip and rip was very short today, and you got to be prepared for it. It was about 45 minutes, and that was it. Go home or buy the puts. It was a great trade, as well as USO. USO had a similar looking chart. We had the dip. I got the the $35 calls for 6 cents, and they ended up hitting 15. This is the trade I was talking about. That's more than a double. But after that, we melted lower because USO just went lower, which defies the weakness we saw in the dollar, making this market a little tough to predict these days. How about Fossil? I told you it broke multi-year support, and the stock was broken. Had you not listened to me, guess what? You would have lost money. I mean, look at it. It still hasn't come back. Hasn't even tried to approach the support line. Well, former support line, now resistance. And like I said, even before it broke this line, if it did break it, we're looking at $40, $45 a share. When, how, who knows, but very good chance of that. How about LinkedIn? I made a nice trade on LinkedIn today. If you were in the chat room, you would have saw my post right about here. Down here. Let me get the studies off. We don't need this crap. That's during the market hours. Right down here. These LinkedIn $100 calls were going for 70 cents. Right here. They were as low as 50 cents down here. I got in at 70. I sold at 170. They went to 460. How's that for an option trade for today? You could have got 10 of them at 70 cents. Let's see, do 5. Well, anyway, point being, it was a nice gain. Even when I sold, I like selling a little early, paying it forward a little bit, giving my potential gains to other people because I'm very caring, giving. So I took my 70 cent calls, sold them for $1.70, and then gave them to somebody else. to sell for 460. How generous is that? I'm just so kind. I'm just coming out of my pores, the kindness. I love doing that. Yeah, so after that 460 mark was hit, the stock just melted lower. Point being again, in this market, what are we doing? We're buying the dips, selling the rips if you're trading calls. That's it. You're not holding. Don't. Don't do it. And we did Caterpillar, I believe, already. Let's just go to the SPY again, and let me just show you something that has me a little concerned about this coming week and what we saw this week. I brought it up last night. The major put volume. Major. People hedging, possibly, but look at the volume here. Enormous. Enormous compared to the calls. Let's go next week. We see almost a similar type play out here with the volume. It's almost 2 to 1 at least. People are just piling in. And the next monthly expiration, June 16th, just enormous. Look at the volume here. 129,000. We don't even come close anywhere here. Nowhere. 129,000 on a 130 strike, which is a lot of money because they're priced at $3.65. You're looking at a lot of volume there. A lot of money flow, etc. This would have me concerned. If it's at the 130 strike, but even still, if the stocks continue to drift lower, that's a very profitable position. They're paying for June a 4% further decline. So that's just to make a nice gain between now and June. So it's just something to keep your eyes on. Just like on Thursday night, I pointed out, option traders were betting on a 0.75% decline in the SPY, and we got that and a little more than that. They were spot on. Took a little bit, and so we could see a similar move. Now you're looking at 126 on the SPY. And like I said, if we get that cascading waterfall, we're looking at 121, 122 on the SPY. Before, we break that, might as well just sell everything, go home, stock up on water, supplies, guns. I'm just kidding. So, thanks for listening. It's UPB here. That's my market update. I think we're going to bounce this week. I do. Call it a miracle. We got the G8 meetings. We have the TLT to watch. We have the UUP to watch. We have the US dollar to watch. The commodities are up. Silver was up today. GDX was up. That's the miners ETF. So a lot of people, I think those are bouncing for the sole reason that they're going to have to print. And that's never going away. Not in my lifetime, at least. That's what I believe. So, all right. Once again, thanks for listening. UPB from optionmillionaires.com. I will have more option trades for you as time permits this weekend, possibly. So tune in.